Hello, everyone. It's Midas Letter Live. We got a great show here today. I'm your host, Ed Milewski, joined with my good friend, Bay Street veteran, Steve Misener. So a lot of action today, Steve, like jeepers, creepers. I mean, I think that James was telling me earlier that his index was down almost 20% on the open. That's whoa.
Yeah, there was big declines across the whole cannabis sector, like really free fall selling.
Panic selling.
Yeah, well, yeah, and of course the bids dry up, and then you've got compounded downside. And there were several. I mean, the market, of course, the stock market was down as well. I mean, the Dow was down several hundred points.
The S&P this morning, I woke up at 4 in the morning and I looked, and the S&P futures were down 30, 40 points, and I think there's about a 7-to-1 ratio there.
Yeah.
You know, 7 Dow points to 1 S&P point. And I, you know, to your, we were talking earlier about DBRS making a statement.
Yeah.
You know all about that.
Dominion Bond Rating Service came out today with a rather, I think, profound commentary that certainly was, I think, psychologically negative on the cannabis sector. I don't think it was factually any information that people weren't already aware of. They're arguing that the Canadian cannabis sector, public companies and corporations are not, and LPs are not particularly investment grade in order to issue corporate bond securities. And so they would be rated very low, or possibly rated in some cases in the junk category, or non-investment grade.
You say that word, that makes people nervous, right?
It does, but I mean the issue is that so many junior areas of growth in the Canadian stock market are not revenue producers out of the gate. I mean, think of the junior resource sector that Canada has had as such a profound success for so many years, and it's a very cyclical business. But all those junior exploration companies in oil and more so in mining, I mean, it takes 10 years to build a mine, so there's no revenues.
Right.
So that kind of statement is applicable in blockchain and technology and in junior pharma, junior medical, biotech, where they have to fund those long-standing phase 1, phase 2, phase 3 tests to the tune of $1 billion. So this statement was not any kind of revelation, and in fact, because the equity markets have been so favorable, notwithstanding some continued heavy volatility lately, but really the equity markets have been willing to fund the cannabis sector with straight equity at favorable prices for the issuers. Then they don't need to raise money, they don't need to borrow money, and only the biggest guys, the Cannabis, Auroras, or Freas, the biggest guys, they have banking relationships now that are open to them, so they can go to the bank if they want to use a line of credit, and they're only using it strategically, not because they need to, because they're all flush with cash. So it was an outrageous thing for them to, I think, to issue today. And I guess they felt they needed to say something, but the only bonds that I'm aware of that were issued in the public market are convertible debentures. And convertible debentures are linked to the underlying equity. They are debentures, but they're always unsecured, and they're always subordinated to other corporate debt, so they're always unrated. So there's no corporate bond activity going on that they felt compelled to comment on. And yet it caused, it was probably one of the primary reasons for the chill in the space today that was profound, on top of a negative overall broader equity market.
And maybe that was the climax selling today. I mean, this selling started the day it went legal. So we've had now several days of selling, and so maybe this was the classic sell-off.
The capitulation.
Absolutely, and usually my experience with technical analysis, it's that the big move is the last move, and we saw that this morning. In fact, Afri, I just saw go by here. It's up over $1 a share.
Yeah.
And the Midas Letter Index is only off as of 10 minutes ago about 1/3%. I think it was down 16 or 17% earlier. So look, we've had a big comeback.
Yeah.
My worry now would be, is this just a comeback and we're going to resume a downward to go test those lows again? You know, because we often have those things. But anyway, so
it is. I mean, it's a wild ride today. Again, not that we want to see it, but it's not atypical to see that kind of wild ride when you have a speculative sector and you have a lot of hot money and you have people who've made some money. So you're going to have these inflection points that are way more dramatic than a more mature sector of the stock market.
In a way, you know, we saw, I think Aurora was 5 and change back when Constellation put the money into Canopy Growth.
And back in July, August.
Yeah, and so it went from 5 to 15. Now here we are today. I think I did put my toe in the water, bought a little Aurora this morning, thinking it was, you know, the fear index was at its highest, so that's when you buy, right?
Sure.
And you know, maybe it's just the fact that it's all happened in a week. Like a lot of capital has been eviscerated in a week, right?
Yes. Yeah. I mean, there's that, and also the fact that again, with an overriding sort of negative bias on the broad stock market, you're fighting that aspect of the tape as well to keep the enthusiasm going on this unique kind of once of a lifetime expansion opportunity into a brand new exciting segment of business and the capital markets. So the marijuana stocks are not always going to be able to shake off what's going on in the broader markets.
Yeah, you know, and I mean, there's a lot of people that, you know, we've seen some reports here about certain of these companies, they're not worth what they are, but you know, the shorts have got destroyed in this sector. If you go back to 9 months ago, 10 months ago, and you watch this momentum take these things higher and higher, and I know a lot of guys tried to short them, and they got spanked pretty good. So you know, every dog has its day, so to speak.
But that said, I mean, the DBRS, the Dominion Bond Rating report today, just can be, you know, it is a big, you know, a traditional
how many
organization.
bonds are in the sector
but that's the whole point. And to say that any debt issuances by the sector are not investment grade is a really irrelevant point, because there are no. I'm not aware of any.
Well,
and if there was, people loaning money to the sector would certainly be sophisticated enough to understand the nature of that business that they're funding.
Earlier in the day, I spoke to James West, and we talked about what's going on, and we're going to cut to that now and hear what James is doing at the big convention down in LA. Hey everyone, we got James West here on from California on Skype. We're going to talk to James right now about the market. Hey James, what's going on? Hi, how are you?
Oh, I'm great. Thanks very much for asking. It's a beautiful sunny day here in downtown West Hollywood, and I've been meeting with different cannabis company executives. There's a CanMed medical cannabis conference underway right now at UCLA, and we are going to be interviewing some of the doctors and presenters from that conference for the documentary film "Oh Cannabis," which I'm sure you know we were working on here. We are going to be visiting Weekend Unlimited's Hollywood Party House that they just announced today.
Jeez.
And we will be shooting some of the celebrities there. On Saturday night, we have Paul Pierce and Shaquille O'Neal are going to be hosting an event that is in celebration of the launch of their Vespers brand of CBD products designed specifically for the athletic community.
Wow.
And so it's a real going on thing down here. There are billboards down here advertising cannabis that are the size of a whole apartment building. California has so embraced this cannabis revolution that you certainly would not think that it was illegal in any way, shape, or form federally in this United state, anyways, which is uniformly embracing the cannabis opportunity. But yeah, so we're going to have lots of great content to share with our viewers over time here. But let's talk about the markets. What a violent open to the markets this morning. I mean, we saw the whole sector down, the whole cannabis complex dropped 17 to 20% on the open.
Yeah.
And it appears to be rallying back at this point. But what's your take on the action today?
Well, you know, the thing I saw real early was that the Dominion Bond Rating Service, which is a fairly prestigious organization, they came out and basically rated. They basically said, you know, if you compare marijuana stocks to other sectors, then if you had to give it assign a rating, you'd have to assign even the best ones junk ratings, junk bonds, you know?
Oh, is this the same DBRS that gave CDOs, credit default obligations, and securitized assets AAA ratings in 2006 to 2008? Is that the same DBRS?
I don't know, except, you know, look, we're in a world where people are trying to justify valuations with, it's an ongoing process. People get spooked, news comes out, people say, well, the value, you got this camp out there that says fundamentally these things shouldn't be here. But I understand they're not trading on fundamentals, they're trading on, growth potential, right?
Yeah, one could make the argument that Tesla, which shares the same fundamentals.
Yeah, for sure.
There are U.S. dollar interests, or U.S. cannabis interests are actively lobbying the federal government on measures to prevent the Canadian influx of capital that is causing the U.S. cannabis sector still to be dominated by U.S. financial firms.
Yeah.
I happen to know that there is one of Canada's largest independent investment banks, probably the one that is most active in cannabis financing, is in Los Angeles this week looking at cannabis opportunities to finance. And the bottom line is U.S. can't muster the big dollars at this point because of the federal prohibition. And that there is no denying that represents an unfair competitive advantage to Canadian investors relative to U.S. ones investing in U.S. cannabis.
Yeah.
They've tried to stop us at the border, saying that, we're going to prevent Canadians from investing in U.S. cannabis. Well, guess what? They can't really effectively do that because there's too much at stake. They can't block Canadian interests. I mean, at least not, they can't do it by proxy through the Customs and Border Patrol. They can't do it by proxy, engaging firms like DBRS to come out with large, what is essentially aiding and abetting the short sellers in this whole thing. And, you really got to question the integrity of U.S. capital markets and regulation in this whole exercise. And there is no doubt whatsoever that the cause of the weakness, the cause of suddenly these reports coming, is short, inspired, strategies like Andrew Left, who has actually more or less lost all effectiveness. He came out today and flip-flopped on Tesla. He's been calling it a short, and now he's saying buy based on the success of the recent model.
Yeah.
But these are active strategies underway by U.S. investors, and it's it's not that I'm trying to impugn the American character here. I'm pretty sure in their position, any investor, regardless of nationality, would do what they could to protect their territory. And so, when you look at the amount of Canadian capital coming into the U.S. sector and the fact that the U.S. cannabis sector remains dominated by Canadian capital and ownership, there's no wonder that there's all this, all of this sort of flannangling behind the scenes machinations to try to get stuff moving in the right direction. But we're having a hard time bringing on guests here who don't want to be seen as supporting the Canadian cannabis industry. So I've had a couple of guests tell me that they won't participate because this is not an American production, and they would participate if it was an American production, which is, it's an American production. I'm in Los Angeles. This is made in the USA.
Yeah. Yeah. Well, I mean, we're in a volatile space where there's lots of room for trying to figure out what valuations are. So sometimes the longs win, sometimes the shorts win. And that's why I look at charts, because if I start to try to analyze everything, I don't know what to think. So I look for overbought and oversold. That's all. When it gets overbought, you don't want to be long. If it gets oversold, you want to be long.
Yeah.
And I don't know what else to say it. And so it's served me reasonably well for the time being, for the time being.
Why don't we take a look at the indexes? Can you put the indexes up there?
Yeah, I think I can. Yeah. Let's see what. Here we go.
I'm looking at the front page of the Midas Letter Cannabis indexes, and I'm just looking at the combined sort of bloodshed that's ongoing here.
Yeah.
The main index is only down 0.74% though, so that's almost staged a full recovery.
Yeah, exactly.
Midas Letter Small Cap Index though remains down 5%, and the CSE Index is the last one to stage a recovery, and it's still down 6.08%. So there's a recovery underway. I don't know if it's going to
your big index is down less than a third right now, like a third of 1%.
Exactly.
Yeah, so that's very, very. You know what? And I can show you right now. I'd say, if you're a trader, I'd say you want to be long now. I think you want to be long because we've had one mother of a correction, and I mean, if you're looking at your index, you can see those two green candles that are separated by about a month, almost going about the same level. Yeah, I'd say there's going to be a wicked rally here now for quite a while. Am I going to bet my life on it? No. But it looks like now, with everything getting washed out, I'm sure everybody's panting very hard and trying to catch their breath. But yeah, you know what? Look, we had the big event last week, and the thing's straight down from then. And so we're bouncing, and we're bouncing hard. So yeah, I expect this rally to have some legs for a while.
Yeah, well, I think in the absence of sector lifting catalysts, it might be a little bit difficult to catch a bid in the on the upside. Did you see the press release that was put out by FSD Pharma? Huge yesterday.
Yeah, I did. Yeah.
So they've managed to acquire a NASDAQ listed pharmaceutical company for what looks like a steal, and I just can't believe that they've managed to pull this off. But it seems like it should be a game changer for the company's shares. However, at this point, obviously, we are not seeing really the turnaround in the stock performance of Huge. But I'll tell you, I put in an order for another 100,000 shares on the bid this morning. I'm not sure if I've been filled yet, but I think I'm starting to feel that I'm going to look at acquiring a bigger position in Huge on the heels of this announcement.
Yeah.
Because when the market comes back and starts looking around for what's happened while this period of softness was underway, I think people are going to arrive at FSD's doorstep and say, "Good God, look what's going on here. Let's load.
Yeah.
Let's back up the truck."
Well, if you had bought it this morning, you could have bought it as low as 38, 39, 40 in that range, and here it is at almost 60. So that's 50%. That's 50% off the bottom.
Yeah. Well, I was watching it, and I didn't actually jump in till 57 cents. But that's because that's the level I bought the position at a couple of days earlier. Yeah. And BMO Investor Line, I had an order in for 180,000, and BMO Investor Line failed to fill my bid, even though it was in at 3:45. And this is a habit of BMO Investor Line. I just want to put out there that if you use BMO Investor Line, they don't seem to fill orders close to the close, which is consistent with a policy in some of these financial institutions that have they think that they know better than you, and they don't like end of day action because they tend to view it as perhaps being motivated by other than just investment interest.
Yeah, no, that's I've had that experience as well. They don't like you putting orders in close to market close different from the price. I don't know what they're, I mean, look at, the banks are banks. I mean, what are you going to do?
Yeah,
What are you
banks
gonna
are
do?
essentially parasites on society, as we all know.
Yeah, yeah. Yeah, but
But
look.
so what else you seeing out there? What else is happening in the events? Like, what else is happening that's going to catalyze positivity?
Well, I think, I mean, specifically, there's a few things here. We saw the markets come off sharply this morning in the U.S. and
Yep.
They've turned around a bit as well. Tilray, or Tilray? Tilray.
Tilray.
Yeah.
TLRY.
Yeah, no. You see that? There's so much going on here. It's nice to see, though, that the big index is only down a modest amount here.
Yeah.
So I think the Kronos had a monster move as well, off
Yeah.
off the bottom. I'm just
Right.
taking a look at it here. Yeah, it's up 30 cents from 984 to 1130. Yeah, that's a big move. That's a big move.
Yeah.
Uh,
Yeah. I got filled at 57 today. Yeah. So I'm now proud owner of a couple 100,000 shares of
there you go.
FSD.
There you go. Yeah. Well,
But I'll tell you what, what's it trading at right now? Can you see the market? I'm kind of offline the live market right now.
on the huge.
Yeah.
Yeah, I can tell you. It's it's bid at 57, offered 58 on 96,000. On 96 million. Make that million people. Million with an M.
Yeah, exactly. There's one thing about FSD Pharma. There's no problem getting in or getting out of that stock anytime you want.
Right. Yeah, well, yeah, I'm going to take a closer look at that. So they now, do they have a company? They own a company that's listed in the U.S.?
Well, the deal's not going to close for 30 days. It's a binding letter of intent at this point. But, they're putting a 30-day fuse on it. You can rest assured that they've already been looking at each other's dirty underwear for many weeks already.
Right.
And that this is probably pretty much a well-baked deal, and 30 days is kind of the minimum you'd have to give it when you make this kind of announcement for the exchange to have a look at it.
Right.
But yeah, does this mean that FSD Pharma is now a NASDAQ traded company? It certainly looks that way to me. I mean, I'm sure the details are going to come out in the days ahead, but
yeah,
I got to hand it to Anthony Durkach. I know why he was interested in coming on our show, because he wanted to, be out there in front of that news. Obviously, he didn't mention anything about it, but what an unbelievable transaction. Like, I think really because of the unfortunate sell-off that was governing the whole cannabis complex this last day, I think that really sort of caused the market to miss the significance of that thing. But it could also be that there's a lot of skepticism, because when you look at a company trading at 60 cents, buying a company trading over $4 US on a senior market, I mean, you've really got to ask yourself, how did that happen?
Yeah.
Does that imply that the NASDAQ has already looked at FSD Pharma and is comfortable with this penny stock from Canada coming in and taking over a mature NASDAQ biotech listing, formerly with no exposure to the U.S. cannabis industry?
Right.
I mean, it's really quite a spectacular thing.
Yeah, are they taking it over for stock or cash, or what's the transaction? I'll look into it. We have to wrap up here because Steve and I got to get ready for. James has got some nicer weather certainly down in California, and I know we'd all like to be there. Interesting though, he made a comment about some of the interviews he wants to do. People don't want to talk to him because he's Canadian, which we touched upon. And there's this not animosity, but a bit of a
competitive issue.
Envy.
Yes.
Maybe.
Yes. I mean, we had the discussion with Derek yesterday about the gentleman who put the full page ad in the Wall Street Journal to say, basically a wake up call to Wall Street and to U.S. political structured to say you can't let the Canadians come down here and eat our lunch by being able to get financing in the markets, get banking, and come down and take control of our marijuana space by giving them such a lead, because legislatively we're still locked on a federal level in the US. So you could see that some of that could kind of surface and in different ways. Envy, maybe some competitiveness, maybe a bit of animosity. You just don't know how. Because clearly the opportunity is much larger in the U.S., but they're trapped with that federal overhang. I mean, a significant restriction on legalization there.
Yeah, Steve, you were talking about the postal strike, and you got an interesting perspective on the timing. Considering that they don't have the power they used to have at all. Anyway, why don't you opine on that for a minute?
Yesterday, but I just think the timing is so I don't know, suspect or so opportunistic. But I mean, I guess if a union and an organization is going to go on strike, they try and strike. The auto guys used to always strike. Sometimes they say they used to strike during hunting season so they could go hunting in the north in November. But they also struck in the fall because that's when all the new models came out. They never struck in the summer when the model changeover shut down, where they struck when the new models were out, when the big three auto companies were trying to make a go of it to get the new models to market quickly. So in this case, Canada Post hasn't had, the labor side hasn't had the leverage that they've had for years because of private sector, couriers and also e-traffic, emails, etc.
The things you can do now are so much easier.
Yeah, so, but that said, this new legislation, October 17th, and Canada Post has some kind of exclusive arrangement, to my understanding, of shipping a lot of the marijuana product through Canada, province to province. So I think that the talk of the strike right now, I think the timing is quite significant. And sadly, I think that there will be a push to settle the strike probably prematurely should it occur. So they have maximum leverage because the federal Liberal government wants this part of their platform to continue unabated in terms of satisfying recreational demand. And if you put a halt to online sales, that would be a significant roadblock if Canada Post has exclusive rights to deliver. I'm not certain on all these facts, but I think the timing of the threat of the strike is certainly suspect.
You know, I'm fairly cynical when it comes to reasons why people do something, and I got to tell you, I wouldn't be surprised if the Postal Service had an axe to grind here. Like, just saying that I can see that, the timing was right for them.
Well, they haven't had leverage against the government for a long time, and here they've got a unique one-off chance to put the squeeze.
I'd love to know how big the Postal Service was, say, 25 years ago, and how big it is today, just from a interest perspective, because there has to be, it has to be a lot smaller now. I would think. I mean, unless the bodies are there and they're doing nothing. But
that I don't know, but I would think there's been some, shall we say, rationalization over the years, whether it's through attrition or other factors. There have had to be some cutbacks.
Yeah, I'm going to go and just go back to the index here for a moment.
Sure.
And just get an idea. You know, what's everything doing here? And here we go.
Well, I think we should also touch a little more on the FSD Pharma. I think that's just
I had a good chat with, as you know, with Steve and
with James.
Sorry, with James. You're Steve, of course. You know that it's interesting. I mean, they've done this transaction. Looks to be a very, potentially adding value to huge. And yet the stock went from 38 cents to 58. When you look at $1.3 billion outstanding, that's a $300 million swing in market cap.
It's over 100 million shares. I mean,
100 million.
Very, very profound. I mean, we had this big sell-off this morning on the cannabis sector right through to the early afternoon. We've talked about some of the lows for the day, and now we've had tremendous turnaround. And 100 million shares on FSD Pharma is very impressive. A turnaround from 38 cents to nearly 60 is very impressive, and on huge volume. I mean,
and again, I mean, I'm not. Go ahead.
Pun intended, huge volume.
Yeah, huge
that's
volume.
The stock symbol for people.
They've had unbelievable volume, but I mean, look, and again, I think Anthony's a great guy, fellow Polski Ogórki. What he's done is amazing, but I'm going back to how many shares there are, what's the price, what's the market cap, and hey, I mean, obviously if they can get it to 700, 800 million, maybe it's going to go to $1.5 billion, but you know.
Well, as James pointed out, I mean, it looks like they bought this company or merging friendly deal takeover with this U.S. company at a tremendous price, especially when you consider U.S. valuations for anything pharma related. Now, this is a specialty pharma with the CBD access, but I mean, we saw what Tilray did and has been able to do on the NASDAQ.
Yes.
The fact that that FSD is going to head into the NASDAQ because the acquiring company, the target company, is already on the NASDAQ. They will have to reapply, it says in their press release, because obviously the merged entity is a significant new filing issue and reporter. But the path is clear. It's LOI today, within 30 days, a definitive agreement and closure of the transaction shortly thereafter. It's very exciting to see the potential that this goes on the NASDAQ, again, through this path, let alone the further development of their product platform with this acquisition. And in their release as well, there's a interesting reference that one of the, it says Professor Raphael Mechoulouan, I'm sorry about the pronunciation, is considered the godfather of medical cannabis. And he's the chairman of the advisory board. So you've got someone described as the godfather of medicinal cannabis who's on the advisory board of the new target company. Obviously will be involved with FSD and the new merged entity. I mean, that's pretty incredible credentials right there.
Yeah. I've just put up, there we are, there's the huge chart, and we're looking at a we're looking at a 3-month chart. I'm going to switch to a 6-month chart, and that's a 6-month chart. But look at this this action here at the end. I mean, look at that swing. That's a monster swing.
It sure is.
And a green candle, so that's the positive. We'll have to wait and see, folks. But look at the volume here. Yep. Big volume, obviously. Yep. And you know, sometimes that's what it takes. You get big people in there, and then the next thing you know, this thing starts moving.
Yeah, I want to clarify that I mentioned close to 100 million shares. That's posting 66 million. It's possible that
that's with other exchanges. With other exchanges.
With other exchanges.
Yeah, that according to what,
add that in the aggregate. Yeah.
It's according to this, it's 99 million.
Yeah.
Okay, so
I also wanted to touch on another big piece of news from Hampton.
Oh yeah.
Another company that we've talked about here.
Sure, I know those people well.
And they've made a announcement today of a binding letter of intent to acquire a licensed cannabis manufacturing company in California where they are based. So that's going to give them instant revenues and change the operating profile of the company. I think there'll be more news to follow on that, but they're talking about the ability to produce high-value white label and branded extracts for distribution across the California markets. And keep in mind that a company that solely operates in California can make a great go of things. I mean, it's the population of California is bigger than all of Canada. The GDP of California, if it was a separate country, is listed as something like the 6th largest in the world. I mean, it's a staggering, maybe the 5th. It's a staggering number on its own from a macroeconomic perspective. And we know that it's a very large and very deep and prosperous market for cannabis products of all kinds, both.
Yeah, there's been a number of changes with the company too. There's been some management changes,
Yes.
and
Yeah, they have a new interim CEO,
yes,
but
Christian Scovena.
Yeah, but we'll be looking for
I like Christian.
a permanent replacement there, I think, is pending. That seems to be the indication, and that's exciting from the perspective.
Yeah.
And the stock looks cheap.
Well, it looks very cheap. It really does. It never really seemed to get some of the froth that a lot of the other ones in the sector got, but maybe that can change now. Now we're going to go to a piece here that Liz West did earlier, and it has to do with the feds. They're going to deal with people that have had past convictions, and when you're talking about, less than an ounce a pot, and I mean a simple possession, which really looks stupid now. So Liz West had it at a meeting earlier, so we're going to hear from Liz.
Yeah.
Now that the laws on cannabis have changed, individuals who previously acquired criminal records for simple possession of cannabis should be allowed to shed the burden and the stigma of that record.
Well, a pardon means that you no longer have that entry on your record. I'm not aware of what circumstance a pardon would help you, whether it's applying for a job or ownership, applying to reside somewhere, or perhaps in family court if there's a dispute and your record comes out, or a vulnerable sector search.
Right.
So if you apply to work with kids or in some place where there's heightened security, I think that your previous conviction would come out.
NDP MP Murray Rankin agrees that it's not enough and tweeted about his bill, which proposed the expungement of cannabis convictions. While this news might be somewhat appealing to people with those simple possession convictions, it does absolutely nothing for people who are convicted with trafficking, like activist Jody Emery.
My husband Mark and I were broke and struggling, and we thought if we got into dispensaries like everyone else, we'd be regulated into existence like Uber and Airbnb. But it was the opposite, and I got arrested in March 2017. I was charged with numerous conspiracy offenses, looking at life in prison. So, of course, I'm looking at a plea deal, thinking that's far better to take a $200,000 financial hit than jail time, but I'm still working very hard on paying off that major fine. For me, I'm sad to say I can't go to the United States anymore, and there are so many great opportunities and people and places there I wish I could travel to, so that's a major hurdle. I'm not able to volunteer with kids at summer camp like I used to when I was younger. I can't do any of those other volunteer projects that my record prevents me from engaging in.
So what's next? Well, Jody's on the advisory board of cannabisamnesty.ca, and she plans on focusing on expunging the records of all non-violent cannabis convictions. For Midas Letter Live in Toronto, I'm Liz West.
It's going to be a real, I think, dog's breakfast trying to sort out, like a lot of people are incarcerated right now because of marijuana possession.
Well, it isn't even, well, that for sure, but it isn't even the incarceration, notwithstanding the incredible hardship that represents for people, but just people who were convicted of a lesser than crime of being incarcerated, but still having probation or
can't get across the border.
They can't get across the border.
Yeah,
it's on their resume.
Yeah.
It's on their police records and job searches, and we talked about it yesterday that many of the young people who got tagged with that got fairly strict sentences or strict rulings against them because they went to court without their parents because they didn't want their parents to know.
Right.
They went without a lawyer and they went without their parents.
Yeah.
And so even for very small amounts that should have been thrown out or given leniency, many of them got really quite egregious convictions in the 80s and the 90s and more recently. So I think that's very unfortunate. So we hope that the pardon process works.
Sure.
But also we're not sure whether the American government would recognize pardons the way they did in the past. They may have to apply separately for some kind of visa or some kind of pass to get in there.
Yeah, I've been told that if you're at the border and a border patrol asks you if you ever smoke pot, you can't say yes. Like, you know, I certainly wouldn't.
Yeah.
I've never been asked. I guess I look too straight.
Bill Clinton said he never inhaled.
There you go. Yeah, that's interesting.
I think back to the broader markets, Ed, just a couple other notes. When we're looking at the U.S. market on the Dow today, I was having a look, and it was 2 weeks ago when we shared this desk when we did a few shows, and those were tremendous down days of 800 points, followed by a 500-point down day for the American markets.
That's right. Was it 2 weeks already?
Yeah, and but I wanted to look at the new lows because we're again examining factors of the breadth of the market.
Yeah, I'm going to try and get the index up here.
And 2 weeks ago, we had that very sharp down day, and we had 850 new lows on the New York Stock Exchange. 850 individual securities that were new lows 2 weeks ago. Today, we have 685 new lows. Now, that's against about 3,000 listings. So big numbers. There is some double counting because some of those are ETFs in specific sectors, but so we haven't quite hit the new low number that we hit 2 weeks ago, and we had similar numbers, high magnitude numbers of new lows back in January, February sell-off as well. But 685 is still a big number, even if it's not as large as 2 weeks ago, and it.
We're going to put up a 1 month here, the Dow, Steve, and you're right. At the Dow now, this is only 30 companies, but we went down here into newer lows, but now we've bounced back. So yeah, this is looking like maybe a little double bottom here. You know, that's the Dow, which is only 30 companies.
Yeah,
and then
we're also seeing again narrow leadership in the U.S. market. It was fewer and fewer names that were making the new highs that were carrying, but they're the big heavyweights that were carrying the weight of the index and keeping the index intact. What we're also seeing in the U.S. is a rollover in performance on some of the smaller and mid-cap names. The Russell Index and other mid-cap and small-cap names are showing a great deal of technical damage or weakness. So we'll have to see in the next few weeks if we get some kind of turnaround. Today, I think it was that Caterpillar came out with some big earnings, tremendous earnings. The biggest global, I think maybe they're not as big as the Japanese, but one of the biggest global implement companies in the world.
Sure.
And a real kind of bellwether in a way of global
activity,
infrastructure activity, because it's mining and it's construction and bridge building, etc. So they came out with very, very strong earnings, but what the market didn't like was the guidance. They're saying we're doing great, but our costs are going up. Trump is getting his labor bump that he's been looking for, and we're at that very high level of employment now with only 3.8% unemployment, which is almost deemed full employment. So we're getting the wage pressures, and we're also getting a little bit on the interest rate side. So a lot of those types of businesses and those big high ticket equipment orders are financed through leases, or they're financed through debt. So even quarter point moves can be squeezing those margins. So the forward guidance was what the market doesn't like. Even if the earnings are compelling right now.
You and I have been watching markets for decades now. Do you think that we're here, like we're gonna have to live with higher rates now going forward? Like the days of really cheap money that we saw, barring some catastrophe, it seems like
I think we're getting there, or we're there now, because it's taken 30 years. But look at the unemployment being the big number. You think of how, first of all, the U.S. economy, the U.S. Employment pool keeps expanding by such a large number, both through immigration and through just young people entering the workforce every year, in the terms of a few million people every year that are looking for jobs. The fact that unemployment numbers have come down so far to what's deemed to be textbook full employment.
It's full employment, yeah.
Yeah, so that becomes a wage squeeze, and labor is still, 50-60% of the cost line of the average U.S. corporation. So labor is the one thing that can be inflationary. Oil's not really that inflationary, and we don't have upside pressure on oil.
Yeah.
Other raw materials are not inflationary. Labor's the one cost line, and as the economy becomes more and more the information age, then labor, even specialized skilled white-collar labor, becomes a labor component of pressure on inflation. So yeah, we're probably facing some inflation. The Fed's been talking about inflation, and they have more measurement tools than are accessible to the public, and they're talking about a few more rate hikes. So yeah, the cheap money's probably gone.
The prospect of living with more volatility seems inevitable. I mean, 2 weeks ago, I'm sure oil was $75, and today I saw it under 66. You know, so that's a big swing. I mean, if you're, you know,
it is.
To your point. Now, earlier, I guess we have a piece here. Deborah Honig is going to interview Atlas Engineering Products, and let's hear what Deborah has to say.
Hi, I'm Deborah Honig, and today we are talking to Guy Champagne. Guy is president of Atlas Engineered Products. Thanks for joining us today, Guy.
Thank you for having me.
So, Guy, a year ago I had no idea what a truss was. Since meeting you, I've learned a lot about trusses and also the consolidation play that you've started. Would you tell us a bit about that?
Sure. So we came to trade last November 9th, as a result of an RTO transaction, and the object of the transaction was a truss company on Vancouver Island in BC. And trusses are those triangular structures that support roofs of houses. And we set out at that time to consolidate an industry that's very fragmented. There are about 300 truss companies across Canada, all of them owner managed, all of them available for a multiple that's somewhat lower than what we would typically attract in the capital markets. And it seemed a natural industry for us to consolidate various companies within.
Why is the industry so fragmented?
Typically, the truss companies serve economically serve a radius of about 200 kilometers, because trusses are difficult to ship. If you think of a truss on a flat deck truck, they flop over the edges of the truck, and you can only ship them within certain distances. So generally, the industry is quite scattered and quite fragmented.
Okay, and there's no other major player that's rolling up the industry?
At this point, there's really been no significant consolidator in Canada. There have been a few small regional clusters, but we're looking at, in addition to harnessing this exit tailwind, these owner managers that are looking to exit and sell their businesses, we're harnessing another tailwind underway in the construction industry that has to do with the shortage of skilled labor. And the industry is shifting to more component manufacturing than strictly truss manufacturing and stick framing on site. So we're finding ourselves being drawn into an industry that's also being drawn by its clients to sell prefabricated walls and prefabricated floors, and so the potential for growth, growth organically in addition to consolidation, is pretty dramatic in our sector.
Interesting. So you offer more than just roof trusses now?
Yeah, with the acquisition of Tendel Pacer, which we're on the verge of closing. Next week, as a matter of fact, we're going to be selling prefabricated walls, prefabricated floors. We closed the acquisition of Coastal Windows a few weeks ago in BC, which is a small footprint window manufacturing business that we'll replicate in our other operating areas. And so we sell walls, floors, windows, trusses, anything a builder requires to get from planning to lockup in a fraction of the time otherwise necessary.
And what's the advantage of that?
So essentially by fabricating components like walls and floors and trusses and so forth in a controlled environment, we're able to do that for economies of about 20 to 25% under the cost of it, of manufacturing those on site. And we're also able to shorten the the time to lockup by about 35%. So if you can imagine builders who avail themselves of our products, they'll be able to essentially shorten their cash cycle by 35% over the course of a season, thereby building more units and becoming more profitable themselves.
Seems like a huge advantage.
It's a huge advantage to builders, yeah.
So maybe you can take me through some of the acquisitions that you've done since your RTO?
So obviously the RTO was our first acquisition. At that time, the sales at Atlas were in the $8 to $10 million a year range. Our first acquisition was in Clinton, Ontario, Clinton Truss, which was a $3.5 million a year company. The acquisition that followed that was Alberta TrueBeam, which was an equipment purchase. The acquisition that followed that was Satellite Truss in Merrickville, Ontario, just outside of Ottawa. And then Coastal Windows, and now Tandell Pacer. So over the course of this period, from November 8th of last year to beginning of November of this year, we've accumulated essentially what will represent in our next fiscal year about $47 million in sales and an EBITDA margin of roughly 14.7%. Wow. So we're delivering on plan, and it seems to be developing quite nicely.
That's some pretty good growth.
Yeah, when we first started, when we first introduced the idea to the investment community, our thought was that we would be a $50 million company over the space of 3 years. We started knocking on doors, and there was enough interest from vendors that at this rate we'll be at $50 million within a year of starting, and our target, our goal at this point is $150 million in 3 years, with a commitment to deliver, adjusted EBITDA of 15%.
Great. Well, congratulations.
Thank you.
Ahead of schedule. That's good.
On plan. Yes.
So there's been some weakness in the housing market recently. Yep. Are you finding that this is a headwind?
It's certainly a headwind for the majority of the industry. Now, part of our strategy, as I said earlier, is to broaden the product mix into walls and floors and windows. So essentially, notwithstanding a drop in housing starts, we see increasing our share of wallet of each of the projects that we undertake. So, for example, the addressable market for trusses alone is about $1 billion a year in Canada, and if you add walls and floors to that, it becomes an addressable market of $2.5 billion. So, with that as a proactive growth strategy or diversification strategy, we feel that we're going to be able to offset any drop in housing starts.
Okay, and are you targeting certain markets?
At this point, we've been very fortunate in the Ontario marketplace. Most of our acquisitions have been in the Ontario marketplace, so we've developed a certain critical mass here that we continue to try and build on. What we're seeing in Ontario is the emergence of a hub and spoke network, where we have a large manufacturing facility surrounded by smaller truss manufacturing or truss and engineered wood products distribution facilities. What we anticipate is replicating that structure in other geographical areas. So you'll see that emerge in the West, particularly in the U.S. as well, as we continue to ferret out acquisition opportunities.
Great. And so what's next for Atlas?
We've recently announced, in addition to our Q1 results, which were fairly strong, we've recently announced the recruitment of a CEO to replace, Hadi Abbasi, the founder, and I, who had the role. We shared the role to some extent. So we're very, very pleased that we've got an industry-leading CEO to take the company to the next level while we retreat to the boardroom and the strategy table and support him in any way that he requires our help.
Okay, fantastic. I look forward to meeting him.
Great.
So thank you very much for joining us today.
You're welcome.
And good luck with Atlas.
Thank you.
Well, welcome back here. We're live again, and it was a very, very volatile day in the cannabis sector. Aurora was all over the place, and it traded about 100 million shares, and they got listed on the New York Stock Exchange today, which is always a big thing. Now, Matthew Chin interviewed some people there, and we're going to listen to Matthew Chin talk about whether or not this is a good move to get listed on the New York Stock Exchange.
Canadian cannabis companies are hoping to see some green in the US markets. Aurora Cannabis is now the 4th Canadian cannabis company listing on the US stock exchange next to Cronos, Tilray, and Canopy Growth. So why are Canadian cannabis companies so eager to list on the New York Stock Exchange?
Well, it's you're on the big board, so you're getting global attention, global market making. Institutions are seeing your name listed in the most actively traded names around the world.
It's not easy to get onto the New York Stock Exchange. There are many regulations companies have to adhere to. There must be at least 400 shareholders, pre-tax income of $10 million within 3 years, pass a review by the New York Stock Exchange Listing Board. Canadian cannabis companies cannot operate on US soil. And even then, there are still a lot of risks.
You know, there's a double-edged sword, because if you're executing, you're going to do quite well and American investors will invest in your name. If there are hiccups, if for any reason there is a question about your operations or about your disclosure, there's a significant amount of shorting, hedge fund activity, and it could also cause unwanted or negative attention on your share price.
For Trait Biosciences, a cannabis and hemp biomedical research company, the risks are still worth applying to list on the New York Stock Exchange for numerous reasons.
One is to get access to a larger investor base and more capital, and the other is to raise awareness. These are companies that have ambitions on being world-class companies, and the New York Stock Exchange is the preeminent stock exchange in the world. Gives them a lot of credibility in that pursuit.
Up next, Leamington-based medical cannabis company APEUF is next in line for the New York Stock Exchange, but has yet to be approved. For Midas Letter Live, I'm Matthew Chin.
Okay, very interesting, very interesting. Aurora on New York, and we were talking about volume there, but the volume on all the Toronto various exchanges, according to my source here, 123 million shares. That's not even New York Stock Exchange.
That's a staggering.
Yeah, that's so at $10 a share, say.
Yeah.
123. That's $1 billion to
$1 billion of trading.
At least, yeah.
That's just staggering.
Thing trades like water.
Yeah, in a way, the cannabis sector that has created so much wealth uniquely in Canada for Canadians and is providing jobs in some of these smaller regional areas, especially some of the economically depressed zones, it's bringing a lot of good to the table, and it's also helping the brokerage business here. I mean, not that people shed tears for brokers, but
right.
But I mean, it's generating a lot of excitement, a lot of volume, and a lot of liquidity, and a lot of financing opportunities.
Yeah.
And now they're taking their successes here, and we learned in the interview a couple weeks ago that Aurora is in Denmark now, and they're buying the company in South America. The ICC Labs is going to close in early November, so they'll be in Uruguay. I mean, from the Canadian base, and this is part of what Derek was talking about yesterday, saying the Americans want to get some freedom to compete, but the Canadian companies are using their first mover advantage and all of the play of the capital that's been available to them, you know, to huge advantage, and they're really making an impact not just here but globally.
Yeah.
And liquidity like that is staggering. 123 million shares.
I know, when you asked me that, I had to look. I just had to make sure. Maybe I read it wrong. But yeah, so big day again in this space. I'm going to put up the Midas Letter indices here.
Yeah. And what we can also note is that the listing on New York with Aurora also provides, it enhances liquidity because you get arbitrage where
absolutely.
A player can fill an order in Canadian dollars in Toronto and then maybe offset the order on the other side of the trade in New York in US dollars, and there are currency arbitrage that can take place. So liquidity is often enhanced with dual listings. It mostly is.
Yeah, for sure.
And we know that APEUF has also applied to list on the New York Stock Exchange. So Canopy provided the leadership last January, but people are following suit. Arbitrage,
absolutely. Now, why is that?
Can fill an order in.
That's not what I want. Okay, I've got to where I want to be here. Okay. Yeah, I'm just trying to find, you know what, I got to get better at...
And then we saw Tilray's success on the NASDAQ. I mean, that was significant. And now we have Huge listing, acquiring the company. That is on the NASDAQ. That will lead to Huge getting listed on the NASDAQ. Also a big positive for that company and for the sector.
Yeah, this is the smaller of the indices here, but still down 7%. I think the market's really sold off. That's the sense I get, Steve, because we saw Aurora at 11, and here it is around 10-ish. Huge is still at 57.
Yeah, it's up almost 20% on the day, in a day when there was just incredible wild ride of volatility.
There's that Namaste, and I guess that was picked out by this guy out in the States, this Andrew Leff, and he said he didn't think it was worth a quarter. Anyway, it's tumbling. Mm-hmm. So well, we got a lot to look forward to tomorrow to try and to figure out where this is all going to go. Tilray's going by here at only down $1.80. Amazing monster market cap there.
Well, we did spot the DBRS news release with a negative view of the credit quality of the sector this morning as a potential catalyst for the powerful sell-off we saw across the board. It was harder for us to denote what was the cause of the reversal this afternoon. But we have seen reversals like that before, and a couple weeks ago when we had the big sell-off in the sector, remember it was rumors around 2 o'clock in the afternoon that Frio was talking to Philip Morris and Altria for a potential deal. Now both companies came out and said we can't comment on that, and that's what they're expected to say. But that alone, that potential rumor that was reported in the Globe and Mail that day caused a big bounce and turnaround in the sector. Can't put our finger on it at the moment. It may yet surface for tomorrow's show what caused the turnaround today, but God bless the turnaround today.
Well, we did come back a lot, and I think that the swing in the Dow also was around 500 points from bottom to top. So,
true enough. Yes,
like a lot of these things are all tied in. It's about money flows. So just reviewing the indices here, the Midas Letter indices, the major, the big market stocks were down 4.8%. When I was talking to James earlier, it was only down less than a third of a point.
Yep.
So there's been a further erosion. So we're going to leave it there, folks. Thanks for joining us today. Hope you enjoyed the show. Always feel like you can subscribe. I'm Ed Milewski. I'm with my friend Steve Misener. Have a great day.
Good day.